Well, that's what took me down the rabbit hole that led me to being a way more profitable trader. This thing just took off alongside Nvidia. Same with some of the other major indices, and even the Russell got a little bit of a push off of this. The S&P 500, of course, these things have the Nvidia company stock in it, so of course they're going to rally hard when Nvidia gets a rally. But in just a bit, we have in 10 minutes or so, we have unemployment claim. Let's have a look at the dollar index while we're talking about it. Again, I mentioned I do have a position on the dollar index at the time. And look at this candle. This is kind of an interesting one to watch out for as we get into today's price action. We're looking at the daily chart. This is DXY, so it's the US dollar index. We are sitting at support, but noticeably so, we have actually just wicked underneath support. And let's watch how this candle closes. I'll say this, if the candle closes like lower than this, like if we take out today's lows and the dollar's just bearish, I'm probably going to stop out of my euro trade and be short-term, kind of out of the idea of being dollar bullish. However, if this chart stays strong, if we even maybe go positive, that would be actually a very decisively bullish candle. Whereas you get this wick underneath support, this attempt to go lower, if it scoops the lows and kind of bounces back, it could actually signal that perhaps that's the bottoming of the dollar. But again, do we know that for sure? No, we were waiting to see. I do have positions already open, so we'll see if this does turn into a bigger bounce. But at this time, I am pretty well aware that if this thing does close underneath those lows, I probably need to be out of my position. Okay. So why stay bullish on the dollar? Well, price action is either going to confirm or deny this side of things. But with my trading, I do a mix of fundamentals and technicals. So most traders, most retail traders, like 99% of their analysis is simply technical charts. They only look at charts. And, you know, in my view, if you only look at technicals, if you never even consider fundamentals, you're missing a lot of the story. You're only looking at the price reaction to the fundamentals. You're not looking at the driving forces themselves. So if we consider fundamentals with the dollar, though, the story has been hot inflation. It's been, you know, we get PMI numbers this morning. That'll be interesting out of the US. But it's been, you know, high inflation, strong labor market, strong economic reads for the most part. So to me, that signals that the dollar should stay strong, should stay supported, unless we see a terrible PMI number or something that really draws, you know, away from that story today, which would likely lead to a stop out, in my view, in my personal trading. So again, if we can rally from here, then great. Then the narrative stays intact and price action agrees. But if price action disagrees today, I need to be, you know, prudent with my risk management and take a small loss. All right, guys, let's see what we get. In terms of claims, if there's any volatility here, gold just dropped quickly. The dollar just shot up a bit further. S&P, not much of a movement. NASDAQ, not much. 201K, unemployment claims came better than expected. For Canada, we had retail sales come out slightly less. So jobs data out of the US, still looking strong. That's going to put pressure on gold. And this has been frustrating. If you've been watching gold, I got to say, I have not been trading it myself, but I can imagine that if you are trading it, it's been frustrating because this, you know, every time gold starts to get a little bit of a run going, right? Economic data comes back and smacks it back down. Will that be the theme of the day? I mean, we got it with claims just now, but now the question becomes, is it going to be the same case with PMI data? We have services and manufacturing at 9:45. That is in 1 hour and 15 minutes. So we got some time. We're going to be looking at lots of charts here this morning.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that TraderNick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
PMIs, right? With this, remember what we said about the 50 point. Higher than 50 is expansion, lower than 50 is contraction when it comes to PMI numbers. So if we get a PMI number that shows more strength, then what that would tell us about the US economy is that it's running strong. We're expecting here, oh, by the way, we got revised numbers. That's interesting. The expected numbers here today for services is 52.4. So if that number came in like 53, for example, that would be strong for the US dollar. If the manufacturing number came in at 51, those would be strong numbers for the US dollar, because what's that showing you? Well, that's showing you that in the manufacturing and services sector, collectively, growth in the economy, strong for the dollar, right? It starts to make sense when you tie all the different fundamental pieces together to get yourself kind of a full story on this front. I believe oil is still a top setup, but at one point it was very bullish. Yep, there's +6. Why is this bullish? Well, COT data, so big money was very long biased on the oil market. Seasonally, kind of getting a positive read. Trend is to the upside. The economic reads kind of mixed. That what's kind of holding us back on this front, by the way, is retail sales. Retail sales were a little disappointing last week, actually pretty disappointing. Inflation has been pretty hot. That's going to be a signal of strength for oil overall. Labor stats have been really strong. That's going to be good for oil. Why would labor being strong, talking about NFP, etc., why would that be strong for oil? Let's think about that for a moment. Here's the main reason. If labor is strong, it means that people are out there buying things and traveling, and there's a strong economy. Remember that a strong labor market is pretty key in showcasing a strong economy. Strong economies demand a lot of oil, right? This is how the Edgefinder's algorithm works. It looks at data, it computes things, and it generates outputs here. If you're somebody who's looking to use fundamentals and you don't already have a copy of the Edgefinder, we have 30 days access available. If you're somebody who's looking to try out our software, if you'd like to try out the tool that gets you access to COT data, smart money indicator, the bank forecast, retail positioning, the investor sentiment surveys, all sorts of stuff. Again, I mentioned I'm short euro dollar. This one has, well, it came back and retested resistance, but I'm still in the trade. So price moved up against me here and then reversed. We'll see if that can continue to reverse or if this is just a pullback here. But I do like the idea of staying short euro dollar until, either I get stopped out or this market rolls over. But my thought process with the euro is, again, strong dollar should push this thing lower. It's been doing a well enough job. Let's see if it can continue to do so. So, yeah. Australian dollar, kind of a similar candle. It almost wicked up to this point. Pound USD, big wick to the upside. I'm curious to see how this one plays out. This could be kind of a last run to the upside, grab some stops and then roll back over. But again, going to come down to a key economic data point, PMI 945. It's about 1 hour away. Quick look at dollar yen. Dollar yen's trending up nicely. If you're watching the dollar yen on a 4-hour chart, this could be kind of interesting to watch for. If you're bullish dollar yen, a couple setups here. If you're willing to wait on a range, maybe you watch the lower end of this. Here's the 4-hour demand zone, but we're kind of just in a range, a little bit of a flag pattern here, big push up, range bound. And again, watch those PMI numbers, because if you're watching the PMI numbers and you get something strong here today, that could be the catalyst to push us out of this range. So watch that close. Nick, fundamentally, why are you on the bullish on the dollar? Because all of our main indicators are bullish. What do I mean by that? Well, I'll break this down. First of all, COT is pretty bullish on the dollar. But in other areas, you have hot inflation. So let me just write this out really quick. It'll be a little easier if I do it this way. CPI, hot. NFP, hot. PMIs overall have been hot. This is a question mark today. Is this going to change? Fed, mixed. Overall, dovish, but cautiously dovish, it seems. So my point is, if you want to know why something is bullish or bearish, what I like to point to is the real forces in the market. These are the real forces in the market. Inflation reads, jobs data, purchasing managers, which is an indicator of the economy, right? If purchasing managers are demanding mass amounts of everything, that's going to be bullish for the economy. Does that make sense? Hopefully that answers your question. But these reads have been very strong for the US dollar, and we remain bullish on the dollar until something in that narrative cracks. Now, I'm not a perma bull on the dollar by any means. I was bearish the dollar at the turn of the year, which ended up being a really great play, as I was able to get long on some indices on the same basis of why I was bearish on the dollar. I traded the dollar short, traded the indices long, and it was a really nice kind of the end of the year rally. However, we flipped more into everything was hot data. So with this hot data overall, now not every piece of data has been perfect. You've had, I think it was the Philly Fed manufacturing. There was something that was really poor. Retail sales were poor for the dollar. So it's not a perfect story here for the dollar index, but you have to always kind of look at the collective. Nothing is going to be 100% when it comes to market data, just like technicals. There's not a technical strategy that's perfect. There's not fundamentals that are always every single time right. What we try and do on this channel, and more importantly, what we've automated with our software, is to look at all things that we consider to be significantly moving to the market, generate a bullish and bearish bias between the collective, and get a general sense. So if I'm not getting enough reads to get me into a setup, I may be very cautious to actually enter something. So in terms of the dollar pairs, the only one that I'm actually interested in trading right now on a bullish perspective is actually dollar yen. So dollar yen is getting a strong read on COT. Retail positioning is bearish against the dollar yen, so I like the upside there. Again, if retail traders are all short, we have to think about that as a possible bullish signal. I'll illustrate that here to you on the retail positioning page. Check this out. Look at this. So retail traders, 26% long, 74% short. So retail traders are really betting against the dollar yen right now. That to us is a contrarian bullish signal. So that's how we use data. Again, on this channel, what I hope you take away is that the best traders in the world are not just using support and resistance. Transparently, the best traders in the world, if you listen to managers that manage bajillions of dollars of money, do they ever talk about trend lines and support and resistance? No, they talk about macro market forces and the risks that they need to kind of account for. Professional money managers, they incorporate some level of market data and risk management into their trading. All of them, everyone who I've ever spoken to on this channel. I had a podcast series where I was interviewing a lot of people that manage money. They all talked about market data, right? They all were keen and aware to what the Fed was doing next, right? There's a theme there. If big, smart money managers are doing that, it's worth noting. It's worth considering, like, hey, why are they so intrigued in that data? Well, that's what took me down the rabbit hole that led me to being a way more profitable trader. Use market data, use it to your advantage, because again, I believe it to be way easier to find an edge in market data than it is to try and find an edge purely technicals. Can you do it? Sure you can. There are traders out there who trade just simple technical analysis and they're able to make money. I'm not disputing that. But I do think that for the average person, if you start to really embrace and understand market data, that is where, it's a lot easier to find kind of edges in the market to a degree. Riding the fundamental story is key.
Let's do some seriousness here. what my approach is, there is a standing order every beginning of the month. I buy. So whatever the price, doesn't really matter. That's for my long-term ones. So there has been some okay entries there. January wasn't too happy about. So there's no technicals in that. That's kind of my first approach, especially between October, November, December, January, February, March, April, and then ending around May. Is kind of where I do this. And then when we have these deeper pullbacks, I was criticized last year for doing that, but I'm like, I don't care. And see who, and now we can see who ended up on the good side. And then I try technically to catch these pullbacks, which I have been horrible at. So of course now I should have bought that. Of course we should have. It's 2% up or whatever. And we are at 50,000, and I think we're gonna go to 10,000 by the end of the unless they squeeze it. But the easy peasy lemon squeezy part is something like that in March. So a new higher high, wait for it to make an even higher high, then come back down to this kind of support. So that's probably a trade in like a week or two, because now it's gone, unless it's come back down there again or down there again to 49,000, 4,900, sorry, and then 48 something.
Yeah, and you know, I do think what's interesting here, Ivan, I have to pull this up because all the index people that I speak with have pointed this out. Second half of February is seasonally, and let me share my screen because before my computer crashes again, we will share the screen. There you go. Okay, so check this out. Seasonality of the S&P 500, last 10-year historical weekly performance. This is seasonally one of the worst periods of the year. Second half of February, we've seen historically a little bit of weakness in the S&P. Now, for the exact reason as to why that happens, I don't know. But seasonal patterns have been really strong. If you traded seasonally last year on the S&P 500, you probably outperformed. Like, it followed suit perfectly last year. Like, we saw the end of the year fourth quarter rally that we usually see. You know, we saw the summer sell-offs. We saw everything kind of play out seasonally well. You know, with the second half of February being somewhat more of a weak period of time, it will be interesting. You just drew a chart that I really agree with. If that seasonality doesn't come true this year and you just straight up see a rip through the highs, then yeah, I think in you know, mid-March or you know, sometime in March, maybe it's time to buy the pullback. However, if that February seasonality does come true, you may get a chance to buy it at a pullback here, back down at the lows. Now, again, we just had a huge rip, so that could take some time to get there. But I'm kind of interested in both scenarios, either a pullback down to this point or a significant breakout followed by a retest. So just thought that was worth mentioning. Seasonality here for the S&P. Second half of February is a little bit sketchy. So I'm not overly bullish at these levels, but just kind of waiting to see what happens. All right.
I think, if I'm not too wrong about it, it should be across 17,000 data points.
Is that right? 17,000. That's a pretty good sample size.
It's that's at least for the market one. So I'm double checking the S&P one. There's two providers. There's market, and then there is S&P global.
Yep. And guys, we're about 1 minute out. Just as you can see on the screen here, I'll break it down for you. You've got the indices, S&P, NASDAQ, Dow over on the far left. You got your dollar index here front and center, euro dollar, pound dollar, gold, which is taking a huge dive right now, and oil on the bottom right. So whatever chart you're interested in, just keep an eye here. I'm sure we'll react to the numbers here. We got about 45 seconds to go before PMI numbers do get dropped. All right. And again, look at gold go here. 2022 an ounce, dropped off from 20. It lost $10 an ounce here just in the last few hours. I am long oil, so I would like to see oil continue higher. Again, PMIs will probably impact both sides over here, and in some ways inversely, right? Strong economic data. Breaking news coming in 10 seconds. All right, let's see what we get. All right, PMI should be coming out here in just a moment.
Where is it? There it is.
All right, 51.5 compared to 50.5. So manufacturing was hotter than expected. Those services were cooler. And just to note, services is the larger of the two components of the U.S. economy. So let's see how the charts are reacting. S&P and NAS haven't moved much. Dollar index giving back some gains. Again, as I mentioned, services being the bigger component of the two. Ivan, what are your thoughts and reaction to this?
Look at your oil trade.
Yep, it's staying alive. We'll take it.
A bit of a mix, I would argue. Yeah, manufacturing is better than expected, but services, the great one, is lower, still about 50. So it's right now it's just pricing out the expectation versus the real versus actual. So it's still gonna keep dollar in a bid, but of course this gives hope to the bears, at least for some small minutes at least.
Yeah, I mean, I think again the key thing here is you might say, well, Nick, Ivan, the numbers they're mixed. Why is the dollar not? But it's because the services is the larger of the two. So this is a larger component of the economy. So this underperforming expectations is going to have a little bit more drag than the manufacturing's positive can assist. So
did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.